Hello, everybody.
Hello.
As we promised, we are recording our first session from scratch. We're going to go all over the details. We appreciate your patience, and actually, we got a lot of questions. Some of them are related to the things that actually we managed to broadcast properly, but they raised some very interesting questions. So, a part of what we say today is going to address these questions as well. And we start moving forward. And first, let me introduce myself and the team. So my name is Gidi Zakay. I'm CEO and initiator of Bittax, and I was working for the Israeli tax authorities for almost 2 decades. My last position was number 2, responsible for legislation and pre-ruling institution. So regulation is no stranger to me. Joining us from our team, Or, which is VP for Bittax. Or, please introduce yourself.
Hi, I'm Bittax VP. I'm in charge of marketing, biz dev, and probably all operation. So if you need anything, you can contact me anytime.
We're also proud to introduce you to Hector, which is our man in the United States. Different times take different measures, and we need a strong guy in the United States. So welcome aboard. Please introduce yourself.
Hello, everyone. My name is Hector Claudio. I'm here just to, like Gidi said, just to answer any questions anyone might have from the IRS or any of the new crypto guidelines and all the clarifications. So let me know.
Thank you, Hector. And also we have Ronnie. Probably most of you have been in touch with Ronnie. Ronnie is responsible for overseas partnerships, and he's pushing forward crypto, Bitcoin, and taxation as well. Please introduce yourself in a few words, Ronnie, if you want to say something.
Hi, as Gidi said, my name is Ronnie, and I'm in charge about the partnerships in Bittax. I'm happy to be here, and I'm glad that everybody learning together right now.
Ronnie is the guy that's moving things. So if anything you need in Bittax and this is Israel, you go to Ronnie. If this is the United States, you have Hector. You have O and I also to support everything. So let's start moving forward. And I'm already saying up front, the friendship that you see on the screen between the Bitcoin and the IRS is not by mistake. So the thing is that we have developed the understanding and technology to go with this understanding that when you come to tax crypto, the place to do this on Bitcoin. From what I saw, I have a large experience with the regulation to try to fit to Bitcoin into a suit that doesn't belong to him. It doesn't look good and it doesn't work good. So crypto is no securities, and you cannot push it into screens that are not related to the blockchain, and you cannot put him on Excel sheet. It would not do. Bitcoin comes with a native tool. It's called the blockchain. So what we do and what we hope to do with you is to focus on the way we should implement tax efforts on blockchain. You will be surprised to find out that not only that it is more safe and immutable, it is also tax efficient. So let's start to move forward. The first thing is to know about technology. So let's take it forward. So the first part is about cryptocurrency bases for tax pros, and this is done on blockchain. And just to give you the first understanding of a very, very light touch, you see to your right, yes, this is not mistake. These are 2 blocks. One of them was before the other. And you get to see that if you had a sale in this block, you might be selling in short term. If you wait a while and you can see that the sale occurred in a different block, which comes after, maybe we can look at the blockchain and determine that this was a long-term capital gain. This is just a small touch to let you understand that if you have a blockchain, the blockchain is a ledger. It is moving forward with what we do. It has the ability to calculate and to collect all the information in an immutable way to protect us. Actually, we say in Bittax that the one person that might be able to forge a tax calculation on blockchain is the guy that can steal a Bitcoin from blockchain. And since you don't have this one, then you don't get to have the other one. So basically, this is what we have. And I think, Hector, maybe you should say a few words about your understanding because you're actually living this for quite a while. You are quite intensive. I ask you this opportunity, please go to sleep because you didn't sleep so long because you're all the time on the blockchain. Take the time to sleep a few minutes and then continue. Please share with us your experience.
Okay. So yes, I think that it's really important to do specific identifications, especially anyone that's going to be doing long-term hodling. I've heard a few people saying that the IRS doesn't have the ability to track this, and I think that that's a little incorrect. It can provide a lot of incorrect returns being filed. And then we know that once the IRS starts auditing these returns, because we can file anything. A lot of people forget that when it comes to taxes, we can put anything on paper. The problem is that as you mentioned, the blockchain is gonna disprove anything. So if it's not correct, they're gonna find out. It's just a matter of when. And I think that they're already doing it. They're working with chain analysis, so it's just a matter.
So I heard some people say that Chainalysis also doesn't know how to read the blockchain. Maybe.
I think that's
IRS.
incorrect.
If you read, of course it is incorrect. If you read the materials that are written, we can say, you know, when we went to the blockchain, we made the vow that we're gonna be the CPA that knows blockchain the most and the cryptonaire that knows regulation the most. So we know what's on blockchain. And actually, if you review the IRS directives, they're so precise, very professional, using Chainalysis, which are the experts on blockchain, and they use the information. And when you read through, this is all about blockchain, and they enable people to do specific identification. And bear in mind, just to give a little drop of what's coming next in the future for this course, I mean, Bitcoin was climbing since 2009, thousands of percent. So if you do FIFO, it will hurt you. But if you do specific identification, even if you didn't plan anything, you're probably going to be better off. We had an experience for the last year in Israel for 1 year. Unbelievable results. Between 20 to 80% tax saving, and this is by the book and safe. So let's move forward and see how things are happening. The main objective of this part is to learn a bit about blockchain. It's not too heavy. Maybe you would need to watch the video again, take the time. We're here for you. We're going to repeat this, and then you can take the time to watch it again. We'll make it very straightforward and simple. And actually, if you take the time to understand, it's not so complicated. After all, taxes are more complicated, maybe. So what we know about blockchain, maybe, or would you like to share with us the growth of the markets? Would you like to describe this for us, please?
So this is the worldwide market, not the US market yet. And as we can see that from 2015, 4 billion market cap, to 2019, end of October, and 168 billion market cap. Bitcoin is growing and fast growing actually. And this is when I think 2019 is the year of crypto regulation. Tax authorities around the world are publishing their new guidance. We have seen the IRS, then the HMRC, the UK tax authority just published theirs, Portugal and France. So this will be the year that the tax authorities stepped into the game and published their new guidance. And hopefully 2020 will be the year that they will actually report and pay their taxes.
So, you know, Hector, we take pride that when markets were very, very weak in January 2019, Or held the big seminar of summit of Bitcoin in Tel Aviv University. We had there more than 1,000 people worldwide. We had David Charm, we had Nick Szabo, and it was very exciting and interesting. And all like, at that time she didn't sleep, I guess. But I saw you're following the European legislation and regulation. Would you like to share this with us as well, please?
Yes. So, I mean, like we see a lot of really good things happening. We've heard about Malta, Singapore, France, Portugal. So that's, at least we see some countries that are taking the initiative. They're trying to attract crypto investors to their economies. So, I mean, we see that the U.S. is just falling behind. We've seen what's happening with New York with the bit license, and they still haven't given their 20th license, which is I think it's ridiculous, because I know there will be more people trying to get them. So now it's going into taxes. It's just, so the U.S. I think that we're behind. We're behind, and we're falling even farther, because we hear what China is also doing, and then we hear everything that's happening in Europe, and then here,
sometimes sometimes things look different when you look from the outside, because actually when we look at money laundering, tax compliant, and we want to be good and we want to focus the future, I'm talking about what we do in Israel, we just need to see what's happening in the United States, because the next year or two, it will come to Israel. So we follow closely the IRS legislation. And I must tell you, the Israeli tax authorities are also into crypto. We have some problem with banks here. The banks, I would say this very politely, they don't get it yet, or they don't want to get it. This is as polite as I can get, and it's very polite, believe me, because they're stopping everything. So we can just get to say we're envy the Swiss that got the crypto valley in Zug. So the Square guys did it much faster than everybody else. So we're proud of them, and we hope we should do the same. Okay, so let's go back to our issues, and we'd like to point again. This is about blockchain and Bitcoin, and you said you mentioned the worldwide market cap. 43% of crypto wallet users are based in the United States. So a huge piece of this section belongs to the United States. And now it's like we're coming to a very critical point, because as you mentioned before, the first move, Hector, was on 2014, bit license and whatever goes with it. Then it wasn't quite for a while. I guess the end of 2017 woke everybody up. And then we have 2018 and 19, the beginning, when Congress members addressed the IRS. The IRS, I guess you see what's coming out of there. They didn't wait for the letter. They're working on this for a long time. It's very serious stuff. So they're talking about crypto tax policy, and they are heavily into it. Oh, you've been covering this for a long time, also the letters and also the information in there. And actually it was quite intensive, I guess. Can you elaborate a bit, please?
Well, first of all, I think we need to make a separation between SEC and securities and licensing and the IRS and tax legislation. Bit license is related to licensing and to the securities laws. And this is the IRS. The IRS, we all know, has first guidance in 2014. Then we all thought
and then they said that crypto is asset.
Right. We all thought after congressmen approached them in the end of the last tax season, they will soon be publishing a new guidance. But surprisingly, they decided to send letter first to 10,000 people, which they were received their names through Coinbase. IRS is getting names from all crypto exchange working in the IRS about their traders. They have the 1099B or K from the exchanges, so they have the name of the people. They just, compare their notes, and they sent 10,000 letters to those who did not report their taxes. Then after that, after the due time of those letters answering arrived, then they published the new guidance, which
means the IRS is loud and clear, and they say, And this is actually one of Bittax's main basic forms and understanding. We do not need to wait for a change in legislation in order to tax crypto and to do this right also from the side of the taxpayers. The laws could be better. I think there's a big issue with exchange when you exchange between crypto to another one. This should be treated differently, to my opinion. And I think that when you have a fork and you don't get to meet the coin or to sell it, it is problematic. But these are things I think that while we go forward, maybe they will change, but they're making sense as it is. It's just a bit problematic. But basically, the law as it is working. And you can tax Bitcoin and cryptocurrency just the same way you tax any other assets. And actually, as I've mentioned before, if you do this right, look at the blockchain, and Ronnie will soon tell you a bit about how we do it when we come to the wallets. Ronnie will describe a bit the work we do on blockchain. And let me tell you a secret. Whatever we can do, the IRS already did. So this is important. I think the big opportunity for everybody now is to be like early adopters of taxation on blockchain, because there's no doubt in my mind that that's going to be the next thing. So if you read through the directives, if you read and see what IRS is doing, you cannot ignore this. I mean, you can put your head in the sand, but it would not do. And we're going to cover stuff and you're going to see. And once you get the technology, as we mentioned before, we always say that if we talk to someone that we see is not with crypto, all he needs to do is to look at the technology. Once you get the technology, you understand something. It's like hits you. You say, okay, so as long as they're internet, they're going to be crypto. That's the name of the game. So let's move a bit forward and let us share with you our knowledge and understanding of how to derive the proper taxation and information from blockchain in a manner that will leave you and your clients perfectly safe and happy. So we're coming from a world that is centralized. So you see all these crowds around the centralized places. It can be a bank, it can be a data station, it can be a credit company, but all the information, all the data, all the operation is taking place on the same place. This is where they got the power. We need to pay them in order to use our own assets. It doesn't make sense. Until 2009, should I say, there was no other option. Since we have the blockchain, we can do things in a decentralized way. So as you see some guys here sitting around. So all of these computers are holding the ledger, and they don't need any centralized entity to take care of them. They can do this properly. They can do this by themselves. The technology, and we're not going to dive too deep into technology. The technology, in far as what we understand and what is important for us, first of all, is creating. It's giving back the power to the people. The decentralization is giving the internet back to the people. And this is the future. It's not only about money. It's not only about taxation. For now, we're going to focus shortly of how this miracle happened and what's in it for us. How can we treat our clients better using this technology? So basically, the way things are happening is that you see all these miners are working around the new block. Each and every one of them is working on a private block that he does on his system. At your left, you see the mempool. If you make a transaction, the first place the transaction goes is into the mempool. Then anybody that is doing a block taking transaction from the mempool. So each block done by an individual node at his station, corner station, can never include double spend because the protocol won't allow it. It's one computer that takes transactions. It will always be clear. It will always be good. Now, all of them are competition. They compete on whom is going to solve the riddle. Now, the riddle is like you running the computer in order to get a result. We're not going to dive into it now, but you need a lot of CPU. And from time to time, each one of them gets to win. But the most important thing is take time and effort. So what we say is like the proof of work takes a lot of intensive work. So it costs electricity because maybe if it wasn't that costly, it was not working, but we'll discuss this maybe in another time. Basically, If we have the block, everybody are going to the next one. Once they went to the next block, we know that they're looking at the previous one. So what we get is blocks that are okay, no double spend, everybody are reviewing them, and you cannot change it because you need to have powerful computer worldwide, stronger than everybody else. So these are the blocks. Now, why are these blocks so interesting? Look at this magnitude glass here. In here, we got the transactions. The transactions are creating the ledger. So if everybody looking at the same stuff, this is what we get. So as we mentioned before, when you've been so clear, IRS is all over the blockchain, is using chain analysis, is tracking information, and they say this out loud. They say this out loud. So one of our strongest directive with Bittax, and please hear me out because this is one of the most important things that we can offer you to understand the way we operate. So we have like a Bittax rule. So the first one, actually I've mentioned the second one quite before that we don't need to change the rule, but the biggest one, and it's a secret, so please keep it between us, the blockchain identifies the truth. This is so important. So if somebody is coming in, and we're coming from a regulation perspective, so we know the voluntary disclosure, we know people come forward and said, I want to come clean. So when someone says, I want to come clean, he needs to be honest. Being an honest taxpayer is about answering all the questions to the tax advisor and maybe to the tax authorities. If you use the blockchain, you cannot be mistaken, and also you cannot lie if you want to be bought. But the point is that when you use the blockchain, think about all these. Only if you did one transaction, 2 or 3, maybe it will go without noticing. But usually, when you start moving on blockchain, you cannot lie. Think of that: so many transactions, and you deposit and withdraw from exchanges, and you put fiat money in and out. There is no way somebody can plan this from 2013 in a manner that everything works great. So the thing is, if somebody is not honest, we're not going to check why. We're just going to know we don't have a full picture and we say nice goodbye. But if somebody is honest, for the first time worldwide, for regulation purposes, someone can prove I am right. I'm telling the truth, and you can prove this in an immutable way. With our system, actually, we can tell there's still missing information. And let me tell you, some of the missing information is because people do not remember what they did in 2014. I know it's a big surprise. But when you look at the blockchain, you instantly get all the information, and it works very good. So this is the main important thing of our understanding. If somebody comes over and says, I'm going to be truthful and honest, if you go with the blockchain, you use a smart explorer, you can prove this. And more importantly, the IRS would know. Now, the bad news are that if you fail to do that, let's say if you only filed your reports with Excel and CSVs from the exchanges, and you missed some information from blockchain. So I'm not talking about only establishing a cost basis of deposits. If you're missing some of the information, and tomorrow the IRS will recognize that you had more coins or more action on blockchain, and it's easy to see, you might find yourself in a place that even if it was with no bad intention, you don't want to be there. And if you implement this with an explorer properly on blockchain, you get this right. And let me remind you, Bitcoin and crypto was climbing from 2009. So if you do this properly, you do specific identification, it's very clear, simple, you can prove it. So you're also tax efficient. So let's see how it's done so we know that so many cryptocurrency over 2000, we start focusing heavily on Bitcoin, which is also a very important implementation or other blockchains. And we're going to focus also a bit about the Ethereum blockchain, which is working differently. But let us start with the Bitcoin, which started by the end of 2009. So, Ronnie, would you like to describe shortly about the addresses, the seeds, and the XPub before we start moving on the blockchain? We'd like to warm up before we go on blockchain, so please say a few words.
Okay.
What
Everybody.
are these addresses, XPub, seeds? What are these? What is it? Interesting
Seed
words.
is between 12 to 24 words that you get when you're opening your ledger, your wallet.
Since you had an
So,
HD wallet.
yeah. And this is how you can recover your wallet every time you use the seed, okay? Because everything, the XPubs, the addresses, everything came from hashing the seed. It's a subject for different lesson because it's quite deep diving. But this is how to say, this is the basic. The seed is the 12 words, 12 to 24, that through hashing
And
we
that's
get.
how you get the addresses.
Yes, that's how you get the addresses. And XPub, it's the master addresses. Through the XPub, we can find all our addresses that belong to that wallet, that specific wallet.
Great. And actually, it's sometimes when you look at this, and without even talking about the next chapter that will come later of a proof that you can do without knowledge, it's like black magic, because you put in a stove like 24 words and you get an immutable public key. Yes, it's like a public key that when you hash it, you get an address and you can get coins and nobody else can do it. So you need to remember that the wallets are like, this is nice, it's a wallet. It's the wrong word if you ask me, because the coins are on the blockchain. The blockchain is like a big statue in the middle of the city. Everybody can look at the blockchain and see what's on that. So you see addresses with Bitcoins or with coins, you just don't know whom they belong to. Once you have a bit knowledge, so this is called pseudo-anonymity, but once you have a little knowledge, you can track this. We're going to show you a small example of how we do that. And we know that the IRS won a debate at the Supreme Court of the United States and got the information from Coinbase, and worldwide now things like this are happening. So anybody worldwide that once was on an exchange, they don't need to have any more information rather than to see the deposit and withdrawal addresses, because this is connecting them to the blockchain. And as I mentioned before, once you see an address, you can go through. And as Ronnie said, the XPub, which you have for the HDA wallets, is enabling us to see all the information. You need to consider using the XPub because it is hurting top level security. We, of course, treat it in the highest standard that possible. You should consider and be quite sure that you know what you're doing when you use the XPub. And if you don't, please advise, please contact us so we can elaborate, because you need to know what you do if you use the XPub. But basically, when you use our system, for instance, or any other explorer, all you need to do is use one address and to start moving forward. Let's see. We prepared a very small example of how things are happening. So in this case, I'm going to buy 0.1 Bitcoin. So the starting point, I show you I have an empty wallet. Then I go out and I commit transaction. When I do the transaction, my transaction is out of the mempool. It's already on blockchain. So this is my address and this is my Bitcoin. And then we get to see the same stuff on my wallet. So if a client come over and he's holding a wallet in his hand, bear in mind that whatever he has in his wallet are the addresses and coins that at the same time, they are on one of the blocks in the statute in the middle of the city that everybody can review. So this is an address. The coin is called the UTXO. We're not going to go into this now. So this is the first step. But this is not enough for me. I want more. So I'm buying another piece of Bitcoin, 0.2. Then the same story goes again. This is my wallet before the transaction. Then I go and I bought another coin. And then I look at my wallet after the transaction. So look, this is a different block because it happened later. So former block, you can tell I have a UTXO, a coin, and a different one. Now, we're talking about assets that are going to be taxed by the IRS, and we can see them right here. So why do we need to guess? Why do we need to get Excel sheets that we don't know what they say? So you will tell me probably, well, but the action is going in the exchanges. That's right. The big sales are on exchanges, but for exchanges, you deposit and withdrawal. So if you come with the blockchain and you admit deposits and then you get withdrawal and then you get to compare them to CSVs, it's a full picture. Nobody can fool that. The CSV must be right because it needs to fit the deposit and withdrawals. And the big news, the flash news is like, maybe you admitted some dollar, US money into the exchange. So this is monitored by usual tools. So everybody's happy about this. It's funny that once you move forward, you understand how fragile the information is coming from fiat money. And this is what the regulator is already finding out. To track fiat money is much more difficult. Look at this machine. Nobody can change this, and it's there forever unless something happens to the internet. Let's hope it doesn't. So we continue our journey. We still wanted to have some more Bitcoin, I'm sorry. So we bought some more. And then another transaction, another block, different coins. And this is my wallet after buying so many Bitcoins. And then I go out and sell them. And this is the point when we'd like to tell the IRS what we've sold. And this is very easy. I can show exactly what I bought, when, how much did I pay. This is immutable. This is safe. It's safe for us. It's safe for our clients. We get to track this, to follow it. We get to plan ahead. There are a lot of information we would love to share with you, but we'll take it slowly. Actually, when you implement this kind of tool, you can decide what would be the next Bitcoin I'm going to use. So Hector and I, we were joking about Christmas discounts in shopping centers. If you use these methods, you get a huge discount because you get to deduct and offset your capital losses in case you have them, and yet to buy good stuff. So this is the way it fits in, because this is very straightforward. If you can do specific identification, you can plan ahead, you can protect yourself so nobody will think, or you can prove that you've done right. So I love to hear your understanding in this.
So I think the best way to see this is whoever can master or can learn this method can also become even a better trader or a better crypto owner. Because if someone that's just doing trades and don't understand what you just mentioned, the fact that at the end they're going to have to pay taxes on this, then it's a problem. So whoever can learn this, I think it could benefit more, because we see it all the time. We see all the crypto shows. Everything they talk is about price. They talk about price. They talk about trading. They talk about charts. But not many people are talking about the end result, which is going to be, it doesn't matter how many trades you do. It doesn't matter how much money you earn. You're going to have to report it. And a lot of people just don't keep, I see a lot of misinformation. A lot of people think that they're only due taxes when they sell their crypto. So they think if it's a long-term gain, they still don't have to report it because they haven't sold. And it's not correct. You have to report all that property. Anyone that's doing it in a different way, I think it's creating a lot of problems for the long-term hodlers, because I mean, how are they going to identify those coins? They're going to pick random coins. And then, I mean, if you're short-term, if you're going to file your short-term tax or your short-term gains, then I think that's going to be okay. Because next year you're going to have probably a whole new crypto wallet or a whole new full of new trades. But then if you're holding, if it's someone that, for example, someone that bought in 2014, and they've been filing incorrectly the last 5 years, I mean, what's going to happen with those returns?
Yep. And I think that the main issue is, if I can say, the main issue is like, it comes with a gap. I mean, what we see, and we've seen this actually, we had quite an intensive experience with voluntary disclosure. So what we had is like, the time gap is horrible because, you know, when people were approached, and then you get this, even I, that I was working for 2 decades for the Israeli Tax Authority, and I knew all about it. People were approached actually under FETCA, also by other authorities. They forgot they had a bank account, and they were approached so many years later. Now we're talking only bank accounts and regular fiat money. It is in the archives of the Swiss banks. It's not as solid, clear, and immutable like the blockchain. So I'm afraid that what will happen, and I think I read into the, you know, I say this very carefully, but tax regulators and officials think alike. So I think like tax people. I'm not saying this because I think this is the great thought anybody can have, but I know how it works. So if IRS comes forward and says, okay, so this is our guidelines, follow this. It will be tremendously different next year because this year it's the first time you hear this, maybe, if we live for a while, what happened in 2014. This is serious stuff. So you get to hear this, you get to describe that, talking about specific identification because they're looking for the full picture. The next time, I suspect it won't be that, let's say, comfortable, easy, nice. So we get an opportunity. For us, I consider this to be a huge opportunity, as we all the time mentioned that this is exciting to be a part of the new world and to support this and to make it happen. And also we'd like to protect our clients. So this is a good thing, and it doesn't come with a lot of efforts. I mean, if you know how to use this Explorer, if you know how to pick a service that can do that, and it doesn't necessarily have to be Bittax, it needs to be someone that knows what he's doing, then you can see that. And actually, you can check, you can tell if you're in good hands because you look at the blockchain. Whatever you see in your filing, you press a button. We're going to show this in the coming chapters of our course. You look at the Excel that you file, you look at the 8949, you press a button and oh, you're on the blockchain. This is a proof. That's it. So nobody can claim we write the blockchain, right? It's writing its own way. So this is the blockchain for Bitcoin. And this is how we operate it. Let's move a bit forward just to cover other good stuff. So now we can look at the Ethereum. Ethereum is different than Bitcoin. It's more difficult to do specific identification with Ethereum, although it is possible. And definitely if we're talking from now to the future, and actually Ethereum comes with a nice set of smart contracts. We can use the smart contract to implement and track tax transactions to do quite the same with Bitcoin, but I must say that if you're looking about an immutable, solid stuff, Bitcoin is stronger. Ethereum is much stronger than any Swiss bank you can consider, even if you get it in your pocket. So let's look at the Ethereum. So the Ethereum wallet, we consider this as tax people. It's like, the balance is like a glass of water. So if you're using the same address like most people do with Ethereum, so when you go out and buy Ethereum, you just put it in the glass. And then you probably have to implement FIFO, unless you did something professionally done before, because you can mark this, you can use different addresses, you can use some metadata, but basically if we're looking at the past, it will look like this. Bear in mind, this is 90% power like Bitcoin, because you track it, you see deposits, a lot of ICOs that were ending with losses for taxpayers can be easily tracked on blockchain. Well, we love Shapeshift and the way they treat things. So interesting. We always say we're like kids in kinder store. We don't know which candy to go first. So other people talk about the low-hanging fruits. We're talking about candies. So it's okay. So this is the Ethereum wallet, as I've mentioned. And we still want to cover shortly the forks, mainly because the IRS focused on them on the last Q&A questions. Ronnie, would you like to say a few words about the forks?
Yes. In
How
Bitcoin,
many hours did you spend looking at these forks, Ronnie? You love them, don't you?
yeah. The Bitcoin works with a protocol. It's like the law. of the blockchain, of that blockchain system. So when you change the protocol, you have two changes. It's soft fork and hard fork. When hard fork is when the previous protocol is different from the new, that you cannot making transactions on the same on the past protocol.
We will dive it. I see that you're working very hard to find a simple way to describe this.
Yeah,
and appreciate this. But mainly, Ronnie, I promise you, we will have the chance to dip much heavier into it. But what Ronnie is saying, and please continue, is like the difference between a hard fork and a soft fork is that a soft fork is not suspected of being a tax event. Hard fork is a tax event, and it's taxable, right, Ronnie? When is it? Yeah. When should the taxes be implemented under the IRS directive? You were a bit surprised when you read this.
Yeah, when the airdrop came, airdrop is when you get new coins. On if let's take the Bitcoin. When the Bitcoin Cash hard fork was, you get for each Bitcoin you have, you get.
First of August 2017.
Yeah. So from the moment that I can use that new coin, that make a use, I can sell, trade it, or do something with it. It's a taxable event because I get new property.
Actually, if you read through the directives, you find out that even if you didn't claim your coin, if you didn't use a split tool, by virtue of having the capability of doing so, it means you've got it. I'm not sure the tax bill would be necessarily higher because sometimes the date in which you do the tax event is very important. And some of these, you talked about Bitcoin Cash, it started for $300, $600, boom, 2,500, maybe more, but you probably remember this better than I do. And then this is the question. So thank you so much, Ronnie, for this information. Bear in mind that if you had Bitcoin or any other coin, when it was hard forking, you should be extremely cautious to derive the tax event relevant from that. And bear in mind that if you do this properly, you get to have a new cost basis for the next transaction. Again, use the same coins that you did the transaction because then you might lose the cost basis. How can you use the same coins? Do specific identification, use an explorer. It's very simple. So these are the wallets that we know. We have many more. So all kinds of wallets, we're gonna dive to this later. These are the instruments, where the question for one of our clients, I'm gonna fly abroad. I'm gonna take my wallet with me. I know I shouldn't go around with so much cash. No problem, my friend. This is like a Visa card. This is only enabling you to approach the blockchain. Your money is not in your pocket. It's not a Swiss bank in the pocket. This is a mistake. The money is on the blockchain. These are tools to enable you approach the blockchain. You can change the tools. Ronnie said before, if you know the seed, you have a Bitcoin. If you don't know the seed, I don't know what you have. It's not a Bitcoin. So, would you like to say a few words of what's happening with the exchanges and how do they fit with our system? You've been investigating this quite a while.
Okay, so crypto exchanges are the exchanges that you can trade cryptocurrency. It depends on the exchange. Some exchanges are offering more cryptocurrencies than the other. The ones who work in the US are especially conservative with the kind of currency that they are offering you to buy. We have two ways to get an information from exchanges. It's either through API or through CSV. Both of them needs to come from the clients. So if you are using a CSV, elements in this CSV, it might be in a different CSVs and not in the same one. Every exchange is different, and we have the manual, so we can help you out with every exchange. With American clients, it probably will be Coinbase or Gemini, or maybe Polonix, but not anymore. So you have to understand which CSV you are asking for your clients, we can help you with that. So there is the exchange address that to this address you are deposit your money. We will know on the blockchain, we will see this exchange address, and we will let you know that your client has been traded with crypto exchange if he will forget it. So from the exchange, you need the trades, you need the deposits.
Actually, as all mentioned, sometimes it's a great help in your cost basis. And the most important thing is we protect your clients. You get to protect your clients because it's a lot of information. No human being can remember so much stuff. The computer can, and the blockchain certainly can. Deposit and withdrawal, as we said, and this will enable the cost basis right. You don't need to do it manually anymore. Once you have the data on blockchain, you have the price because it's quoted and they are sold. These coins are sold for the quote number. So it doesn't matter if you date it from the compare of the specific exchange or CSV. You can take the quote from CoinMarketCap, crypto. How do you call this, Ronnie? You track this very accurate crypto exchange that we follow for tracking. So we have all these kind of, and actually the IRS mentioned that if it is a large enough exchange or entity, we can use the quotation, we do this right.
Right. And a lot of the time, people will tell you, what do I need blockchain for? I only traded in this exchange. This is off chain. This is not on chain. But the answer to this, the IRS is requesting specifically in those letters and in its guidance to have a complete report. You will never, ever have a complete report without the blockchain. To get into the exchange, you need to go through blockchain. To get out of the exchange, to withdraw your crypto, you need to go through blockchain.
And if you do it off chain and you use fiat money, it's okay. I mean, it's terrible. You cannot follow fiat money. We know this, but the government is happy. They're using this, and this is more solid in their eyes, so we can rely on this as well. We believe it's much weaker, but bear this. If you follow blockchain, then even what you do with fiat money get to enjoy this because we see all the pictures. So imagine in your mind that you had this life cycle of blockchain and exchanges and fiat money. This story would never fit a lie unless this is a top computer that initiated this in 2009. I don't think this is possible. And even if it is, it's only a small fraction of what we do. So when we go to the exchanges and we had some interesting questions with regard to what would be the tax consequences of someone that is trading in an exchange that is forbidden for US person and then he needs to go out because of that. These are all very complicated questions. We will try to address them later when we feel more solid and we don't like to burden you with too much information. But basically bear in mind that what we're about to do in the coming chapters, and I think this is quite heavy for someone that hears this for the first time. So please take the time, review this video again, look at the blockchain, because we believe, and I say this as a tax person that educated a lot of other generations of people that are working now with the Israel Tax Authority. It's always in the basics, the truth, the result, everything is in the basics. Because people approach taxes, they feel like it needs to be complicated or creative. Well, it does, but this is not in the way the law is written. It is the way of the substance. So blockchain is a used substance, it is solid, it is immutable. And if we want to tax blockchain, we should tax blockchain the way it operates. And the good news are, it's working for us. It's working for honest people that want to prove they're honest and to be tax efficient and to plan ahead. So I think by the end of this course, we will be happy to enable you onboarding client to our system that is treating this exactly like this. And you get to get the protection of our system and also to learn to do it by yourself. You can use other service providers that do the same. I think there might be some good ones, but the point is blockchain. If you want to tax blockchain, don't treat Bitcoin and cryptocurrencies, these are securities. These are cryptocurrency. This is a different game. Use the native tools, they're great. And I would like to thank this wonderful panel. It is great to talk to you people. And thank you so much for all your support, and we're moving forward. And if you have any questions, we're here for you. The whole panel will be happy to assist you with. Thank you, people.